Hi there and welcome back to my channel. My name is Tim. Today I'm going to talk about the stocks and shares ISA that I will be using for the coming tax year from April 2024. In my opinion, Trading 2 and 2 would be the best app for me in my circumstances to use this year. This video is not sponsored by Trading 2 and 2. I'm not affiliated to them. You won't see any link in the box below leading you to open an account and to get free shares. My decision to use Trading 2 and 2 this coming year from April is based on my current circumstances, what I'm going to be trying to do in the next year, and my tolerance for risk. I have based my decision to use Trading 2 and 2 on 5 reasons, which I'll go through to you in this video. The final reason is probably the tipping point, so hang on till the end and you'll understand why. So the first reason I'm going to look at is charges. Trading 2 and 2 has one of the lowest commission structures out of all the platforms out there. Trading 2 and 2 is free if you stay away from foreign currency transactions. However, nothing is free in investing. Even if Trading 2 and 2 don't charge you any commission for holding your investments with them, those collective investment schemes, like the funds and ETFs that group together shares into one bundle, will charge administration costs for maintaining those bundles. And those administrative costs are known as ongoing charge figures. So for instance, if you look at the Invesco S&P 500 ETF, you will see that there's an ongoing charge figure of 0.05%. This is the administrative cost that Invesco charge for maintaining that fund. Therefore, if you were to hold that fund on the Trading 2 and 2 platform, the total cost would be 0.05%. This is actually very low. I should point out that Invesco aren't the only ETF fund provider. I just wanted to use their figures to show the point of OCFs. There is one more charge you need to be aware of with Trading 2 and 2, and that is the means of depositing your money onto their platform. For instance, if I were to use Apple Pay or to use a debit card to deposit money, then I would have a £2,000 ceiling before they started charging a commission. If I just transfer the money from a bank account direct, then that remains free. I looked at some other options in relation to the charges of investment platforms, and 2 others stood out for me. One was the platform that I already have a stocks and shares ISA with, that's Vanguard. Their platform fee is 0.15%. However, Invest Engine, a relatively new investment platform, has 0 commission fees, just like Trading 2 and 2. You're asking why I haven't gone with them? Well, that takes me on to my next reason. The reason I've decided to choose Trading 2 and 2 this year is more to do with reputation. I'm not saying that Invest Engine has a bad reputation, by the way. It's just that they've been around less time than Trading 2 and 2, and that just makes me a little bit nervous. Granted, Trading 2 and 2 hasn't been around as long as that massive company Vanguard. It has still been around since 2004, and for me it just has that historic longevity and standing to make me feel confident in partnering with my money. Trading 2 and 2 and all the other platforms I've mentioned have financial services compensation scheme protection, meaning that anything you put onto that platform is covered and protected up to £85,000 per person. Trading 2 and 2 and all of the other investment platforms I've mentioned are also regulated by the Financial Conduct Authority. Having FSCS protection doesn't necessarily protect your money, however. If your money is invested and your investment is poor and you lose money because of it, Financial Services Compensation Scheme won't protect you there. Just remember that your capital is at risk from investing. So with Invest Engine, it was founded in 2019, so it's only 5 years old. I just feel a bit less comfortable with them. That said, there's nothing to say they aren't a reputable company, and they will be probably someone I would choose in the coming years should their fees remain low. Unlike Invest Engine or Vanguard, Trading 2 and 2 allows you to invest in the shares of individual companies, but also allows you to invest in ETFs and funds, and boasts of over 13,000 investments that are available to buy. On Trading 2 and 2, you can also buy fractional shares, can also purchase fractional shares on Invest Engine. And if you were to purchase a share in one of Vanguard's funds on their platform, you can also purchase a partial share of those funds. There is less choice of funds on both Vanguard and on Invest Engine. Vanguard only sells its own funds. Invest Engine just deals with ETFs. There's a lot to be said for having less choice and more simplicity, especially if you're just starting on your investment journey, and such sites might be a better choice for you. I'm not going to invest in single shares, by the way, and it's not really about choice. The choice of investments I want to use are going to be on there, but they also would be on Invest Engine and Vanguard. I intend to invest in low-cost passive index ETFs and funds, and I would be able to get these investments on other platforms such as Invest Engine Engine and Vanguard. However, I'm sticking to my choice of Trading 212 for those 5 reasons I mentioned. The next reason deals with app usability. Trading 212 has a user-friendly phone and desktop app. It is very easy to purchase investments, rebalance your portfolio, and create a pie where you can hold your investments. It is easy to rebalance the investments in those pies, and that's particularly useful if you want to keep your investments within certain percentages. I invest in global bond funds and like to keep a certain percentage of those. You can share the pies that you create within the community on Trading 2 with others, and you can also see other people's pies and replicate them if that's what you want to do. You can also switch the app from investing to practice, which allows you to get a feel for the app. I should point out that Invest Engine also has a user-friendly app. As I've said already, Invest Engine is probably an option for the future for me. Vanguard doesn't have a phone app and is not particularly user-friendly, although it's okay. But on a desktop, it's relatively easy to negotiate, so it isn't too bad. Reason 5 would be the fact that you can get 5.2% interest on your uninvested cash. This is the deciding factor for me. I have a lump sum that I want to invest in a stocks and shares ISA in the coming financial year, April 2024 onwards. I want to invest this as soon as April comes around to be invested in the market very quickly. I want to drip feed my lump sum into the investments that I choose rather than investing in one lump sum. It's a psychological thing. I don't think I would like it if I invested that lump sum in one go and had a market crash the next day. That probably wouldn't do my ticker any good. Drip feeding or dollar cost averaging is a way of describing how you invest smaller amounts regularly over a longer period of time. You do this as the market fluctuates, so sometimes you pay more, sometimes you pay less, but ultimately over a longer period of time you end up paying an average. With Trading 212, I have the option to hold money, earn interest, and then take that money and drip feed it or dollar cost average it into the investments I purchase. As of the 8th of the 3rd, 2024, the interest that you would receive on those notionally uninvested funds would be 5.25%. And I use the word notionally for a good reason, because there is a catch. This 5.2% interest is not going to be earned as if you were depositing money into a bank savings account. The interest would be gained from Trading 212 taking your money and investing that into qualified money market funds. And by investing your money, they will then give you 5.2% of the profits that they make. More on qualified money market funds in a moment. But firstly, I wanted to check this out, so I asked the Trading 212 customer services bot what all this was about, and this is the reply I got. To earn interest on uninvested cash with Trading 212, the cash is not specifically invested in any particular fund. Instead, Trading 212 uses a mixture of different vehicles to hold the uninvested cash, including regular bank deposits or time deposits at major banks such as JP Morgan and Barclays, as well as potentially using qualified money market funds in the future. Qualified money market funds are low risk funds that invest in financial instruments like government bonds. The specific allocation of your uninvested cash will depend on the current practices of Trading 212. I asked Trading 212 which qualified money market funds they would invest in. This is what they replied. At the moment, Trading 212 is not using any qualified money market funds. They are currently making use of term deposits and normal deposit at major banks such as JP Morgan and Barclays. If there are any changes in the future and qualified money market funds are used, the information will be available on the Trading 212 website and in client statements. What are qualified money market funds? Well, they are funds that consist of shorter dated government and corporate bonds and some short-dated bank deposits, along with some other short-dated instruments. They are just about the lowest risk investment that you can hold and are described as being cash-like, but are not quite as low risk as holding cash in a savings account. Your funds that sit there on the Trading 212 site waiting to be invested into your choice of investments are therefore also invested, but invested in qualified money market funds. So remember, your capital is still at risk, albeit a lower cash-like risk, and much lower than the risk your capital would be were it to be invested in stocks and shares. The main risks with qualified money market funds are that you may not get back the advertised rate that you were promised. This could be due to the person issuing bonds, for instance, within those money market funds defaulting and not being able to pay the bond back. Although, as mentioned in the reply from Trading 212, the money market funds that Trading 212 use are qualified and of high quality. I mentioned earlier that Trading 212 has FSCS protection. Remember I talked about the £85,000 that each person has as as protection should platform default or collapse. That FSCS protection would not protect you from a poor investment performing badly. Please note that transferring money to Trading 212 and having it sitting there does not automatically get you access to this interest rate. You have to opt in by clicking a button and agreeing to the terms and conditions. By clicking that button and agreeing to your terms and conditions, you are agreeing to the money being invested. And in doing so, you then lose FSCS compensation rights over those investments. So although this does generally seem low risk for me, I still want to check whether there's an alternative to this by using an existing cash ISA savings account. Well, in the new financial year, starting in April 2024, some of the ISA rules have changed. Already in this financial year, 2023 to 2024, you can open one of each type of ISA. There are 4 different types of ISA, but for the purposes of this, I'll just stick to stocks and shares and cash ISAs, and you can open one of each within the financial year and deposit your £20,000 maximum allowance across both those accounts. But the problem at the moment within this financial year is that if I deposit £20,000, for instance, into a new cash ISA that I open within the current year, then classed as my current live ISA, I cannot do partial transfers from that ISA into another account. So I wouldn't be able to partially transfer money to drip feed into a stocks and shares ISA. I would have to transfer the whole lot in one go. But in a new financial year, the rules are changing and you will be able to do partial transfers, therefore being able to transfer funds from one account to another account on a regular basis using your live ISA. So technically I could put my new lump sum into a cash ISA and then partially transfer it over to my Trading 212 account. This kind of is up in the air at the moment. There's uncertainty whether providers will have the infrastructure in place to actually administer what I would like to do, and if you can imagine, transferring from one provider to another provider would be a slower, long-winded, more frustrated process where there would undoubtedly be delays in transferring money between accounts. I want to get that deposit into an ISA account as early as I can after April the 6th to start earning interest straight away and to get it invested and for me to be in the market. So I'm going to continue to check to see if a product that will allow partial transfers does become available before April the 6th, and if that is the case, I'll consider my options. At this point I should stress that if you are just a saver looking to save interest and not looking to invest your money, then the method that I've described for what I'm going to do this year may not be suitable for you. To maintain low risk as a saver, you might want to continue to put your money into normal cash ISA savings accounts that do offer comparable interest rates. For me, I'm comfortable using qualified money market funds because I'm going to be investing that money in any case. I intend to provide video updates on how things develop with my Trading 212 account. If I have further information about qualified money market funds or about any cash ISA that will allow me to do what I'm trying to do, then I'll post it in a further video. So do your research to ensure that your investment platform of choice and investments therein are suitable for you. Consider whether straightforward cash savings would be a better option for you than with the qualified money market funds that you're potentially going to get with Trading 212. I've given you my 5 reasons for why I'm going to be doing this. However, those reasons may not fit in with your circumstances. I hope that you found the content of this video useful. Please don't forget to give me the thumbs up if you like what you see. I'm a new channel and this will really help my channel grow going forward. Please consider subscribing to my channel for some more beginner investor content and to turn on your notifications so that you know when I've posted new stuff. Thanks very much for watching.